Hey guys, Sean here. When you decide to sanction a country, you have to be ready for the consequences that could boomerang back and hit you on the head. As we all know, the United States has hit Russia with brutal sanctions over the last few months, and yes, it did hurt them and batter their economy. Biden even came out saying that the ruble has been reduced to Ruble. However, fast forward to the middle of May, and it seems that Russia still isn't on the brink of total collapse yet, and the US is facing a persistently high inflation. Just a few days ago, April CPI numbers revealed an 8.3% inflation rate, which goes in the face of the Fed's rate hikes. And to add insult to injury, the Russian ruble is actually the best performing currency of 2022 so far. So what's really going on? Why are the US sanctions on Russia backfiring? And in this video, we'll go through why Russia is still staying strong and why further sanctions might get them to fight back with their own. This will mean even more chaos in the world, higher inflation, and just drive the markets down even further. I think we all know by now that Biden has hit Russia with a buffet of sanctions, from targeting the assets of oligarchs to preventing Russia from using the SWIFT system. But I would say freezing their stash of $300 billion worth of FX reserves hit Russia the hardest. There's no doubt about it, right? It caused the ruble to initially collapse by 30% and put Russia on the brink of defaulting on its debt multiple times over the past few months. Now the effects are obvious. If Russia did default, it will lose the financial trust of the world and make borrowing harder down the road to rebuild its economy. And another sanction that really doesn't make sense is the oil embargo on Russian oil, yet most of Europe is still buying Russian energy. This is the central problem with sanctions, right? You need to choose your target carefully, and Russia really isn't that soft of a target. They are like North Korea, Syria, or Iran. Russia is a commodity supergiant, and that's key to why the sanctions are really backfiring, right? Russia has tons of commodities the world absolutely needs that will find their way into the market one way or another. And we aren't just talking about oil and gas. Their resources runs the entire gamut, including precious metals, base metals, and most importantly, food exports. We are already seeing food shortages that are worsened by the war, and oil prices are really in a state of volatility as the world just doesn't know how the energy standoff will end. Now, April CPI numbers came out and inflation really hasn't changed much for the US. It is still high, but the devil is in the details, right? Now, if we scrutinize the details, we can see that the biggest increases came from energy services, and that's the electricity and pipe gas you use at home, which sits at 13.7%. Gasoline is at a whopping 43.6%, and food clocks in at 9.4%. To me, those three categories should be the bulk of CPI inflation. Now, Russia's inflation rate is a whopping 17.8%, which is even worse. But the consequences of higher inflation are even more dire for the US because they hold the world reserve currency, and their domestic market is much bigger, right, with a GDP of at least 10 times bigger than Russia. So when a sanction backfires, it affects the United States disproportionately more than Russia. And because we are in a globalized economy, there's really a trickle-down effect that slaps almost every country because the dollar is still the primary currency we all use for trade. Now today, I think we can agree that war isn't just constrained to conventional land, air or sea battles. It's becoming a war on money, right? A financial warfare. And because of the sanctions, the US has actually opened up two financial fronts where the after effects can boomerang back in a really ugly way. Now the first is obvious, and that is Russia could actually start pricing their commodities using the ruble. We are talking about their agricultural products like wheat, their metals and energy. And the big issue is that Russia has already demanded payment for their gas in their local currency, and it is working, right? More and more European countries have now resigned to their fate, and at least for now, have no choice but to buy Russian gas for rubles, right? Using rubles. Yes, it's a bit of a roundabout way of paying in euros and then having it converted to rubles on Russian soil, but the fact still remains, right? Countries in Europe are purchasing Russian commodities using rubles, and this alone is helping to prop up the ruble's strength as it is now technically a commodity currency of sorts. And if we look at the ruble to USD chart, the ruble has actually erased all of its losses and has even ended higher than pre-war. And this is defeating the purpose of the sanctions. Plus, if Russia really pushes on with this course of action, it will effectively force their ruble to circulate and cause another crack in the dollar's hegemony. After all, if you need to buy Russian commodities, you will need rubles and not dollars, and this will turn the entire system on its head. We gotta realize that Russia's no slouch, and just on oil and gas alone, they are the world's second largest producer of crude oil and the largest overall exporter of oil products. That is massive and have enough firepower to really force value on the ruble or move energy prices significantly if the world refuses to trade with it. However, the real concern of the sanctions is their long-term effects that directly impact the United States. The US has embargoed Russian oil, but it only makes up 3% of the crude oil imports. But if you look carefully, 20% of the petroleum products come from Russia, and the majority of which is gasoline and unfinished oil that's going to be refined into gasoline, right? And that just adds upward pressure to prices at the pump. Yes, there were structural issues beforehand that caused energy prices to be high, but they aren't really lying that Russia is also a cause of it, right? It is true that Russian oil is making high energy inflation in the US even worse, but it is a self-inflicted wound. Now, the US still imports resources from Russia, but if Russia forces the ruble on every single commodity, the US will never comply, and this could just push domestic inflation higher from the supply side. But the big worry is, what if Russia hits back on the world with their own sanctions? Remember that right now, sanctions are mainly one way. It's the West bombarding Moscow with tons of sanctions, but things are kinda changing, right? Can you think of the collateral damage if Russia decides to respond in kind, if they decide to hit back where it hurts? I'm talking about cutting off oil and gas as well as food exports. There have already been talks about Russia having the potential to use food as a weapon, and right now, Putin has hit over 30 companies in Europe with energy sanctions. Under this decree, Russian companies are no longer exporting raw materials and resources to these companies. This tit-for-tat strategy could just continue to accelerate every time new sanctions are slapped on Russia, right? And if they decide to use food as blackmail, then this could really get ugly. I think we really need to watch how the US continues their barrage of sanctions, because it could cause more supply chain issues in the world. We are talking about higher food prices and rising energy prices, and all of these will continue to affect us, right? I'm beginning to stack more food and secure more supplies, and it's really the basic stuff. Toilet rolls, toothpaste, shampoo, and almost buying anything that's a product of oil. I'm really buying in monthly batches now, and in such a market where things are falling, this really brings me more or less guaranteed ROI, right, on my cash. You know, I see food prices at my local cafe and takeaway jump by 10 or even 20% if we are keeping it real, and a lot of establishments are kind of starting to shutter because of the rising material costs and energy costs, as well as rental as well. And if inflation really continues to soar as a result of these sanctions, this could cause the stock market to tumble even more. Now, a common misconception is that the high inflation will cause the stock market to rise. And yes, it did rise from 2009 for over a decade, and it had a rocket boost once the Fed printed trillions in 2020. But the climate has changed. Things has changed. The Fed has raised rates, and once they start to pull out money from the economy when they sell their bonds, it's about to get uglier. Over 50% of American households have positions in the stock market, mostly in their 401ks, but if their liquid cash gets drained enough and food needs to be put on the table, I wouldn't put it past people to just sell their stocks for cash to keep surviving, and this could send the stock market cratering even further. And that's the thing with a high inflation environment amidst an economy that's slipping into recession. There's less money around, and whatever dollars we have in our pockets have to be spent on the essentials, right? Who cares what the S&P or even the price of gold is if you're hungry and you need to solve this problem immediately? That's why if further sanctions are placed on Russia, I just don't see how this can be anything positive for the US economy or the general stock market, to be specific. But a long-term concern we should consider is how the sanctions are going to just accelerate de-dollarization even further. Right now, the US dollar is strong because other currencies around it are looking weak, but that's just only one side of the coin. People are running to the dollar not because they love it, but because they have no choice, and in such a market where everything is crashing, treasuries that yield 3% are starting to look rather attractive. And that is in the short term, but longer term, countries are already preparing to find ways to buy things away from the dollar. China wants to buy oil from Saudi Arabia in yuan, Russia is peddling their gas in rubles, and Israel is adding Chinese yuan to their reserves, and even Russia is willing to accept rupees from India for their oil. Now the dominoes are slowly stacking, and we need to pay attention to the sanctions because it just affects the reputation and trust of the dollar. Right now, we are seeing the dollar slowly being pulled away from international reserves percentage-wise, and if this continues, it can wreak havoc on domestic markets. We are talking about the dollar being devalued, US interest rates or bond yields suddenly shooting up to lure investors back in, and that just makes the national debt that much harder to service. And this really isn't good. Powell himself stated that there could be more than one reserve currency in the future, and just that statement alone reveals quite a bit about what we might be seeing down the road. The big advantage the dollar has right now is the world needs it to transact. Because the world also has a lot of excess dollars, they are piling it into treasuries and the US stock market. That's why prices are being kept up high, but that could change if confidence in the dollar is lost. Now, diversifying away from the dollar or dollar assets is something you might want to look into if this sanction war gets drawn out. It could be gold, it could be foreign stocks. I wanted to say crypto, but just take a look at the bloodbath that's going on. So if you're wondering how sanctions affect you, this is how. And in general, they are bad for the country getting hit and the world in general. No one wins. I have a feeling that the true impacts are still building and the effects will be delayed until after this war's concluded. It could be a run towards gold, maybe more yuan will be stockpiled, perhaps the ruble could strengthen even further. Who knows? But not surprisingly, we are seeing a whole new wave of sanctions coming in to hit Russia once again. Now, I'm not here to debate if sanctions are necessary or not. I'm not a geopolitics expert, but this is something that I pay attention to. The US Treasury is warning foreign banks against doing business with Russia, and the EU is looking to restrict oil purchases. So we aren't exactly done with the sanctions barrage just yet. And another interesting bit is that Chinese regulators have been meeting with domestic and foreign banks to really discuss how to protect their assets overseas. Remember that more than 50% of the FX reserves are in US bonds, and this brings up a whole host of questions, right? Is China going to pull out their money from US banks and institutions and dump their treasuries? Are they going to convert it into gold and transport it back home? But more importantly, will the United States let them do so? Now, all these are serious questions that just years ago we would say would never happen, but we are living in normal times. So let me know what you think about the sanctions in the comments below, and if you enjoyed today's video, be sure to smash the like button and subscribe to my channel. Thank you all for watching, and I'll see you soon.